You are now listening to the Bullseye Podcast.
We want to make finance less scary for everybody.
Presented by your hosts,
Michael Becker and Nicholas Nagrelli.
Welcome back, everyone, to episode 2 of Bullseye Podcast.
How you doing, Nick?
Michael, I'm doing great, man. Another big week for the market overall. You know, the first week of December, we have to see some overall gains.
Yeah, we really did. We saw three major averages hit their records: Dow Jones, S&P 500, and the Nasdaq Composite. So, really positive stuff here. Some people thought after the whole month of November that there'd be a little bit of a sell-off, and we did see a little bit of that, but had a pretty strong performance this past week, and something very positive. What's your thoughts on that?
You know, I'm happy to see it, right? Because as the averages go up, so does my account. So I'm always happy to see there's a good week for the markets, because it means that I mostly did well, you know, as well. So no, I think it's awesome. I think that as though the new job reports have been coming out and, you know, job growth is weakening a little bit, the market is betting on stimulus and also betting on conservatives maintaining the House. So even though there is a slower growth in the U.S. economy, the market still seems positive about the future outlook, and positive for that the conservatives will maintain the House, which will have the split government scenario, which the market likes. So what do you think? You think we're still going to see some green in December, or?
Yeah, I think what you touched on was the runoff in Georgia. That's going to be really indicative. Right now, it looks like the Republicans will keep the House. That's what the odds tell us and the polls tell us. But who knows the accuracy of that? Who knows what's changed since the first election? So, I mean, that's going to be huge. If Republicans keep the House, expect the color green. But if they don't, and it is a blue wave, that could be very bad news for the market. So that is definitely something to watch, and I'll definitely be on the edge of my seat for that.
That's important what you said, Mike. A lot of economic experts right now are pointing to the positivity of this split government. But like you said, with the blue wave, there would be a lot of regulations on the market, which can even hinder growth more. And it's something the market tends to fear. And when you change, you know, business models, really, it's kind of hard to adjust for the market. Something new this week that has been in the news a little bit that's kind of interesting just to keep your eye on. A lot of new major companies are now creating a new role, Mike, called CROs. I don't know if you've heard of that before. It's called a Chief Remote Officer. It's a new role in the online workforce we have since COVID. And people are saying it's something to look for, because as these new roles come up, whether it be the Chief Remote Officer or some other kind of online leader in these companies, there's going to be a lot of new tech coming out and a lot of new tech support systems. So a lot of people are saying, well, keep your eyes on tech, keep your eyes on the development with these new positions, as well as a lot of major companies are also switching from real estate-based workplaces, so like in person, to online workplaces. So we could see a whole shift in the workforce in the future, but just something to keep your eye on this week that we saw. So anything else that you found was kind of cool this week, Mike? Or
Well, building off what you were saying, I think in regards to this new CRO position, basically the name of the game today is, if you're technologically behind your competitors, you're toast. You have to be on your game. You have to have the latest technology. You have to have a social media presence. You have to have the right marketing. There's, in today's world, it is so important to be technologically advanced, and if you're not, it can be the death. That's why we've seen so many companies die in recent years, because they haven't been able to keep up with this massive influx. So I think that's very interesting. Something I took note of this week was Boeing's very strong performance. So the reason I found this interesting was because when the pandemic hit, obviously, pretty much all stocks in the Dow took a massive nosedive. And right now, where we are is it's pretty much recovered from that, and it's a little bit more advanced than it was before. But Boeing and the airline industry as a whole are not at that point. And the reason being is because the airline industry is going to be the last industry that's going to come back from this nosedive it took, because people are kind of scared to go on planes. So this week is kind of it's really interesting because it looks like Boeing is starting to make that recovery. This has been something that they've been waiting on for a while. They've had some growth since they hit rock bottom, but it's been nothing like all the other companies and tech companies. So I think it's something to look for. They jumped 8% this week. They're starting to come back up. So it could be interesting to watch their kind of delayed recovery with the rest of the Dow and to see where they go in the near future.
No, yeah, I think you made that important point. I think Boeing's definitely something to watch, right? They're, like you said, they're the backbone of the airline industry, and they are a little delayed because of the fear of flying. Something else this week that jumped out to me, Mike, I don't know if you heard about the Salesforce acquisition of Slack. I use Slack for a couple of my classes, and it's very it's the only competitor really is Microsoft Teams, and Slack is way better. Salesforce though did get crushed this week, down like 8%. A lot of people think that they're paying too much for the acquisition of Slack, but I think Salesforce is another company to watch because I think Slack is really gaining steam, especially as we move to more online working and beyond, and it's a way to connect with people and have messages, share data. So I think that's something to watch. Even though it took a hit, I think it's still a good long run play just to keep your eye on. Don't buy, don't really sell yet now, but just watch that as it develops.
I think
something. Well, what's up?
Sorry, I didn't mean to interrupt you, but I just had a thought pop in my head when you said that you used Slack. And a lot of times when we find ourselves using new things, this can be indicative of potentially this stock gaining steam or growing ahead. So an example of this was a couple months ago, I was online shopping, and I had never shopped on Etsy before. And I found myself shopping on Etsy because they had really cool stuff, and a lot of in-person stores were closed down. And I didn't have any shares of it. I stumbled upon it on the internet through research, and I bought a product from it. And ever since then, Etsy has seen massive growth. They're up 60 points since that. And I think that everybody is kind of their own, in a sense, they're kind of their own sampling. What I mean by that is if you are picking up on new things and you are adapting new companies, new technologies, new methods of doing things, chances are other people are too. So if you see yourself picking up on these new trends, or if you find yourself, say, buying a check account or opening up a PayPal account, these are, you're not the only person that's doing this. So whenever you catch yourself finding something new, just take a look into the stock, see what it's been doing. And what are your thoughts on that?
No, I think you're right. Get ahead of the curve, right? When those trends pop up, you usually see the stock lag a little bit until it really catches steam. So if you're using it, and a lot of people are, I think you should buy. Question for you though, Mike, I have is what have you been buying on Etsy there, man? What's we've been getting there? I've never actually shopped on Etsy. I've never even been on the site, so I don't really know what they have, but
it's a really cool site. It's basically a place for boutique stores to sell their products. So
good quality stuff?
Yeah, good quality, uniqueness. They're really hitting it off with their personalized gifts for the holiday season. So it's something that is interesting to watch because everybody in their hometown has their little stores they love to go to that has its unique touch to it. But what Etsy's doing is it's bringing that unique touch and it's making it nationwide and even global.
Now, is that a buy for you? Is this something you would recommend buying, or
right now I'm not sure if it's a buy. I think it's a hold right now because it is a stay-at-home stock, and with vaccines coming out, and it's just something that it has gone up a lot. It's gone up a lot, so maybe give it a little bit of time, see if it cools down, but I wouldn't necessarily buy it right now. Do you have any buys in mind right now? Any that pop into your head?
Yeah, I do. I just want to say I'm definitely gonna check out Etsy now, see what's going on. But anyways, yeah. So buys right now, there could be a bunch. I have a good top buy I'm gonna give to you guys in a second, but I just wanted to mention something right now. As on this podcast, we talk about everything going on in the market and give some advice from our own learned experiences. And something I've learned the hard way is try to invest more long term rather than short term. So don't be a timer. Don't try to time the market because you're never going to time it. No one can. Most of your market should be made up, or most of your market share should be made up of long term investments such as ETFs or blue chip stocks like Apple, like Facebook, like some examples, Netflix. Because if you take an average salary by the time you're 20, and an average salary in the US is about $56,000, give or take right now, if you take 10% of that and invest it into the market, and you're investing in these blue chips and these high quality ETFs, you can make about 7% of return. That's what the market nets on average, is a 7% return, about approximately. So if you're 20 and you're doing this, 10% of your income, and you're putting into these ETFs and these well-regarded blue chip stocks, my bad, you can expect to have over $1 million by the time you're 70. So that's something to keep in mind. And that extra $1 million can be huge for retirement. Whenever I try to time the market, I either sell too early and the stock skyrockets, or I buy something that's a gamble and I lose some money off. So it's hard to really time. You can have some of your money allotted to doing that, but I think there's a big focus on, a lot of novice investors like to day trade, and that's not a great way to build your money, right? Time will always prevail. It's the great American miracle is that if you invest in the stock market in high quality ETFs and blue chip stocks, you are going to always go up. So just a little piece I wanted to add in there for everyone, because I know it's something I make mistakes with. So I'm assuming a lot of other people do as well. Now, Michael, you did talk about top stocks. And I know you have one that you've been talking to me about a little bit. Are you still bullish on that stock, or?
Yeah, so the name of the stock is Ally Financial, and basically what it is it's an electronic trading platform. And the reason I like this stock so much is because with all the technology in today's world, more and more people are getting into the market because it's so easy to. You can download the app on your phone, put in a social security number, and boom, you have an account, and you could trade right away. So it's easier than ever before, and the company that's thriving off this is Ally. What about you?
I think that's a good stock, Ally Financial. Gotta look that up. For me, Mike, it's a good question. Thanks. I think it's always good to get some numerous picks out here. Again, I said it last week, and I'm gonna say it again. General Electric, ticker is GE. I'm a huge bull when it comes to GE. I have been since probably last November or earlier. I think that the turnaround is really gaining some momentum on Wall Street. And as you brought up the Boeing stock earlier on in the podcast, Boeing's taken a hit because of COVID, and so has GE, as GE makes a lot of parts for the planes of Boeing. So, but now with the Boeing 737 MAX returning to service, optimism is really high for GE, as well as GE has some new acquisitions to help broaden their base. And they're also expected to be carbon neutral by 2030, which is huge. So there's a lot of good going for GE right now. Its stock price has almost doubled since May. So it's almost up like 100%. And the new CEO, Larry Culp, is doing a great job at running the company, at kind of getting its revenue streams higher and getting rid of some of the debt. And Barclays has also raised its price target from 9 to 11. So these are all big reasons why I'm so bullish on GE, and I've seen the returns in my own portfolio from GE. And I just believe in the mission that they have. And their RS rating is 83. They have an RS rating of 83. That means that they have outperformed 83% of the stocks that exist. So that's pretty good. That's a good number to have. So that's why I'm bullish on GE, Mike. I think it's a good buy. I think everyone should get into it. And I think it has a long road to recovery, but I think that it's going to be a nice sustained growth over the next few years. So
Yeah, I agree with everything you said. And something you said earlier, I wanted to touch upon about day trading is a lot of times I fall victim to this a lot. We'll pop open our phone and we'll check our portfolio, and we get so caught up in the micro changes.
Yep.
What everybody has to understand is that there's going to be up days and there's going to be down days, and the market cannot go up every single day. It's inevitable that it's going to go down sometimes. But something I've done to prevent myself from getting caught up in this is I just try to minimize how many times I check my portfolio. Usually I'll check it in the morning, see what happened overnight, read some news articles, see what's going on with that, and check it at the end, see what happened during the day. If you're checking it every hour, every 2 hours, you can get caught up in, oh man, I lost $10 in the last hour. And then
you become
before
crazy
you know-
over it. You become crazy if you.
yeah, you become crazy, and before you know it, you made that back. So it's really important to look at the macro and not the micro, because if you look at the micro, you can really stress yourself out and you can make some bad decisions.
Stay the course, right? If you're investing in good stocks, unless it's going bankrupt, stay the course. That's why ETFs are so important. You stay the course, you're almost guaranteed to gain. You're never guaranteed anything, but your chances are high of making the money and amassing wealth. So, yeah, not a crazy week this week really, but it's one thing that's good is that there are positive, again, vaccine news that they're working with that, and the stock market is still betting on hopes of stimulus and optimism. So December's starting off great.
Yeah, it'll be really interesting to watch how it responds to one of its best months ever in November, especially with the holiday season approaching.
Yep.
I'm really excited.
See where it goes, right? Yeah. Yeah, guys. So I think that is going to wrap up this episode of Bullseye Podcast. Mike, is there anything else you'd like to add before we wrap this up on the second podcast?
No, I just want to say thank you to all of I just want to say thank you to all of you guys for tuning in, and we appreciate your support. Nick, any closing remarks?
Guys, if you've made it this far, follow the podcast. Follow our Instagram account, which I believe is Bullseye Finance, right, Mike? Is that what our Bullseye Finance? I'm going to double check that so we don't give you the wrong. Yep, it's Bullseye Podcast. So follow our Instagram at Bullseye Podcast. Subscribe to our YouTube channel if you're watching on YouTube. And if you guys have anything you want us to talk about, any stocks you want us to analyze for you, or something idea that you have, shoot us at email or text, and we'll be happy to have you on and happy to analyze your stock. So that's it. Goodbye and thank you. And,
Thank you guys.
go check out Etsy, right, Mike? Peace.